Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are into the last week of the month of August, 25th to 29th. And today we are on 25th of August. So during my Asian Sessional Live Market Analysis webinar, I am going to give you the derived forecast and also the levels and also do the market reading to find out how exactly the market is expected to behave during this day as well as the week. So besides the derived forecast and also the market reading, we go in for the trading strategy because ultimately if the forecast goes wrong, then immediately our equity has to be protected with the help of the trading strategy. So our simple approach to the trading strategy is when the position is making loss, use the hedge order to limit the risk. And once the position makes profit, then use the trailing stop to maximize the profit. So that way, we try to see that our equity is well protected once the position start making the profit by keeping stop at entry. And subsequently, we find that we keep the trailing stop as well as the trailing limit order. Thereby, the market can fill anyone and our profit is being realized. So this way, we try to see in every trade that the market can make unexpected moves. So we always keep in mind that the market can make unexpected moves irrespective of our effort to study the intentions of the players and also do all other market trading technique. Because ultimately what is happening in the market, it depends upon the traders committing positions. So the traders can give various views in the blogs and also in the other way of communications. So everywhere in the websites, we might come across that Euro and GBP are bearish. Okay, so after the drop, it is bound to happen in the market. So many of the people will just go into that of the unimaginable levels of the downward trend. So they can even extend it that till end of the year or even to the new year, Euro and GBP could go down. So that is how they could give the interpretations, because when they find that the market was not supposed to drop, when Euro was around 1.40 and GBP came up to that level of 1.7180. So they thought that it is going to be a bullish run on the upside. When it has not happened, when all the analysts found that surprisingly Euro and GBP has started dropping, so they immediately developed the feel and developed the sentiment that long-term Euro and GBP are going to drop. So always they develop the sentiment, and then when the market makes surprise, they only call it as a pullback or just a relief rally. And then later on, once they cross through certain levels, then they try to say that, okay, market is bullish now or bearish now. So now after the last breach of 1.33, then everybody started telling that Euro has become bearish. And when GBP has started coming down to that 1.65, people started telling that it is bearish. But we have been doing sell and buy trade from that 1.398040 level in the case of Euro, and also in the case of GBP 1.7150 and above. So you can understand which way we need to do the studies. It is not that when the charts show that there is going to be a bearish sentiment, when all traders commit their sell positions freely, thinking that Euro and GBP will collapse because of the economic conditions or whatever it is, then the players are here to make money. No, they are not going to make the moves in the market in tandem with that of the expectations of the traders. And the players will try to see that, okay, as many traders take sell positions and absorb all the sells, and they give about 20, 30, 50 pips profit. And if the traders are not willing to accept those profit, instead they want for the downward big move. Then the players hold the market for a prolonged period, and when the traders commit and try to take more averaging positions, and so that they anticipate a big profit on the downside, the players suddenly use some trigger and reverse the market and kill the surprise. Then immediately those traders think that, okay, it is only a bouncing cat, a dead cat bouncing, so they try to sell, or a pullback in the market, or a retracement in the market. They use various type of terminologies and try to continue taking more and more sell positions, and later on find that the market has totally reversed and lose all the money what they earned earlier. So this is what happens in the market. So the traders develop the sentiments and find it very difficult to change it. And immediately you find, like a viral fever, it spreads among that of the analysts. Everybody started telling that the market has become bearish. And every trader think that, okay, when it comes to that of the resistance, I will take a sell position. So this is how you come across the commitments happening in the market. But the wise trader has to understand that there is no point in going along with it of the herd of traders, because these herd of traders might appear making money, but suddenly they will become surprised when the market reverses against them, because the players find that they can make more money by giving continuous surprise in an alternative fashion. So we have come to the last week of the month. Okay, so you will not come across straight downward move, but volatile moves. So that is what we are going to see in the forecast. So we have come to the last week of the month. So month end, you come across the trend reversal moves. It is not the trending move straight away, a smooth downward move, because you would have noticed last week and the week before that they have been doing the trending move. That means not much of a pullback on the upside, but they started making, they hold and drop, hold and drop. Then it is easy for anybody to do sell and buy trade. But now they could make either way stop-ins. So keep that in mind. And only when they are making quick moves, if you try to take sell positions, then you will be able to continue to make profit. But as soon as you open the platform and see that everybody is bearish and simply take sell positions without understanding who is buying when I am selling it. So if you understand, then you will not sell as soon as you open the trading platform. Instead, you wait and see that they make a pullback, and they also make an upward stop-in or upward extended move. Then you try to take sell positions. That means you will be an opportunity trader. Try to be an opportunity trader during that of the last week and the first week of the new month, because the market is expected to make the trend reversal moves. So from that of the bearish move, so-called bearish move on the downside, they are expected to suddenly change from next month and try to bring in more Euro and GBP gaining moves. But to the surprise, the traders will see USDN and USD CHF will also gain levels. At that time, USD CAD is also expected to gain the levels, and Aussie will be making a drop. And you know that when Euro and GBP were dropping, Aussie was holding around 0.93 on an average for a prolonged period. And when Euro and GBP are gaining, they will try to drop Aussie. That is what, and also gain the levels in the case of USD CAD. So keep that in mind, that they are not going to straight make USD gaining, USD weakening move. This time we will come across the contrarian move on the reversal point. Okay. In that process, Euro and GBP are expected to make the volatile moves for 2 weeks and then continue to gain the levels. But you won't come across one-sided gains in the case of Euro and GBP. You know, always I used to tell or explain that Euro and GBP, the players try to make the volatile moves. No, so if you take a sell or a buy and wait for a few days, definitely you will be able to book profit in the case of euro and GBP. But in the case of the denominator currencies and also other currencies, if you are on the wrong side, you may have to wait for a prolonged period of a few months. Only then you will be able to take profit. So in the case of euro and GBP, suppose you are taking a position against the market sentiment, you can do a simple averaging and try to exit with net profit. But in other currencies, it is not possible. That is why I always recommend the small traders to focus only on euro and GBP, even though they appear that they are not giving substantial profit. But definitely in the long run, you will find consistent earning will happen when you focus on trading euro and GBP. Focus on all currencies and see what they are trying to do it. But try to take positions only in the case of euro and GBP. Whenever they make a quick extended upward move or a quick extended downward move, you try to take the positions. On the rise, take a sell. On the drop, you take a buy. And quick moves or false move, they will reverse slowly by making alternatively the intentional move. Then try to book profit. Wait for the next opportunity. Immediately in a few seconds or a few minutes, they will not give another opportunity. They will try to consolidate and induce the traders to go in for a distressed trade. Then later on, next day again, the trap move will start. Then at the time, you try to take a position. That way you can continuously earn money from the other market. Now, the expected market moves in this week, 25th. Today is 25th of August, Monday. Swing and slide moves are expected during the Japanese session and then firm up during the European session. And then swing and slide during US session. We will not come across the week beginning false move because that is going to be the order or that's going to be the type of move they make only during the trending time. Now it is a trend reversal time. They will try to alternatively make up and down moves. So they will quickly make a drop like how they have started today by making a quick drop and firm up in the case of euro and GBP during start of the Japanese session. And they will try to do it tomorrow also and firm up. Then again swing and slide. Then they will start making the drop during the US session. And all along you would have noticed that till last week, they normally firm up during the European session and slide during the US session. But you'll come across in this week, they will predominantly make the slide during the European session. So alternatively, they try to trap the traders who are from Europe or UK or from US, etc., by creating the drop or the gaining moves. Then on Wednesday, a drop and firm up move is expected during the Japanese session. Then swing and firm up moves are expected during the US session. Then Thursday and Friday, you'll find that they will make the swing and slide during the Japanese and the US session and firm up during European session. Then you will come across the visible drop for the month end, then drop and firm up, then swing and drop moves on Friday. That is how they are going to close it. At that time, the distressed long liquidation could happen for the month end. And also they will handle the derivative market at extreme levels. Some of the extreme levels like 1.31 level in the case of euro or 1.64 in the case of GBP, they could, some extreme levels, the players will be having the options, put options, and they will try to book profit in those put options. And then later on, next week, that is the month beginning time, they will again 1 to 5th of September try to make the volatile moves in the market in order to induce the traders to do sell and buy trade. They feel that the market might further come down, but the players silently absorb all that of the sells and slowly start making the upward trending move. So keep in mind that they are not going to make the overall USD gaining move or weakening move afterwards. They will be trying to make the mixed move or the contrarian move from that of next month till end of the year. In that process, Euro and GBP, USD and USD CHF are expected to gain alternatively till end of the year from next month. And also in the case of USD CAD and Australian dollar, they are expected to make the USD gaining move as a contrary move. So this is what expected, the forecast I have given it. Now coming to the levels in which the currencies are expected to make the moves in this week. So Euro could make a swing for about 100 to 150 pips from 1.31 to 1.3250 level, and GBP to 64.50 to 65.50, 100 pips range is very sluggish. Consolidation could happen. And also in the case of USD yen, they are expected to gain from 1.04 to 1.05 level, and Swiss franc from 91.25 to 92.50 they could gain. And in the case of Canadian dollar, they are expected to quickly gain the levels in this week for the month end above that of 1.10. And in the case of Australian dollar, you'll find that suddenly AUD going below that of 93, 92 area and start coming downward. So these are all the expected moves in this particular week. We'll come to that of the market reading. Now, Euro formed the low 1.3186, the high was 1.3220, and actually 3297 is shown. That is of Friday, and they are expected they are not breached the high at the low. And in the case of GBP, 65.38 is the low, 65.57 was the high. They just breached the high by 9 pips. 65.66 they have shown it, and they are holding it above that of the initial high. So they will try to swing like this as an extended move, and later on they will try to make the downward move. Then in the case of yen, 104.13 is the low, 104.28 is the high, they are not reached the low or the high. Then CHF, 91.59, they just breached it by about 3 pips, 91.56 is the current level, 91.80 is the high, they are not breached it. So here again, you come across that they are expected to make the USD weakening move. Then in the case of Canadian dollar, 1.0954 was the initial low. They just cut it by 2 pips and 1.0952, and this come to 1.095153 level, slightly below that of the initial low. And the high was 1.0970. They are holding it. In the case of Australian dollar, 92.92 is the low and 93.12 was the initial high. They went up to 93.18 and holding the market above that of the initial high, 93.12 and 93.16. They are holding it, and they are likely to hold for a brief time, for 2 hours, and later on they are expected to make the slide. So you find that they are making nominally USD weakening move, but it is a mixed move from that of Friday close. Euro has come down by about 33 pips, and USD yen has gained about 27 pips. GBP has just dropped about 8 pips. CHF has gained about 19 pips when Euro has dropped about 33. CHF has not gained because they are handling Euro CHF cross by making downward move in both. And Canadian dollar gained about 7 pips from that of Friday close, and Australian dollar is almost unchanged. So you find that they are only making subdued moves, excepting Euro. All others are doing over 10 to 15 or 20 pips moves. And so as the day proceeds, you'll be able to see that they increase the spread between the high and the low. And then we'll come across some interesting moves happening. And keep in mind, they are expected to make either way volatile moves. Breaching the high, breaching the low, you would be able to see in every session. So an ideal way to trade during this session will be whenever they make a quick rise, take a sell. Whenever they make a quick drop, take a buy. And don't think that it will be a falling knife, and they will try to handle it either way, and then see that the short sellers are trapped from the subsequent week. So you try to be cautious. it doesn't mean that I want you to do the buy and sell trade, but try to sell only when there is a quick rise, not otherwise. But last week, if you remember that I used to say that sell near that of the high. There's absolutely no problem. You'll be able to see the profit. But now you have to see that they just breach the high and go above as an extended stop and quickly and then take a sell so that you'll be able to see profit in your trade. Otherwise, it might be a tricky situation during trend reversal time. So this is the content with regard to the market reading and the trading. So we note down the initial lows and the highs around 330 GMT and then try to take sell near that of the high or when they are making an extended upward move or a stop and then try to book profit during that of the drop. In that, we try to keep the hedge order 30 pips away from the position. And once the position makes 25 pips profit, we keep stop at entry and remove the hedge order. So in that case, hedging order is used instead of a stop. Then we trail the stop in a profit-making position, maintaining 15 pips from that of the market and try to maximize the profit by trailing the limit order or take profit order as well as that of the trailing stop coming from that of the entry level. Thereby, we'll be able to see that the profit is protected. No, we have to conserve the profit and try to see that either we get the minimum profit or the maximum profit. We should not, once a position shows the profit, we should not become greed and simply watch and thinking that, okay, it will go to that of the support level till that time I can hold and book profit. Suddenly, if they reverse, you repent. Because most of the traders, when the going is good, they don't harvest the fruit. No? And later on, they find that the market reverses and they regret. So use the trading strategy so that there won't be any situation wherein you will be compelled to regret. Because 2-3 times if you regret, then you try to modify your trading strategy. And what happens invariably, you try to book profit when you come across a minimal profit and hold the position when it is making huge loss. That is not trading actually. And so holding a position which is making huge loss or grab about 5-10 pips profit once the position turns from loss making to profit making. These things come out of the fear, out of the market fear. So if you get rid of the market fear, then you will be able to understand, okay, they cannot rise the market to the infinity or drop it to infinity. They got their own limits. And so if they drop about 40 pips and then afterwards stop cutting the new low or stop cutting the new high, then for 30 minutes, then we understand, okay, that is the low. And afterwards they are going to consolidate there. Then simply book profit and be happy with that. And don't keep some statistically estimated level as the limit for that and expect the market to fill it. And many of the traders and later on tell me that I kept that by 1 pip I missed it, 2 pips I missed it, because the players do it purposely. So why you do that way? Instead, if you calculate a pivot point and want to keep a take profit order, keep about 4-5 pips closer to the market instead of away or at the exact point, because in between the cup and the lip, so many things can happen. The players might have moved it to that level, but the platform providers would not have moved the market up to that level, no, because there would have been a lot of limit orders and the platform providers will avoid filling it. Sometimes you'll come across the platforms, there will be a lot of stops and then they may just breach and go below and fill all. And if you ask them, they will say that, okay, because of the spread, those orders got filled. But in the event, if you've got a buy position at the lower level, they will not fill. And if you ask any question, why my buy order is not filled, whereas the stop is filled, they won't be having any excuse. Because very rarely you come across a trader who is holding a buy order as well as a stop. Because either the traders will be holding a lower level stop or a lower level buy order, or sometimes we'll come across the take profit order. In such a situation, what happens? The platforms, depending upon the cluster of orders placed, they try to handle it in such a way so that the stops are filled but not the limits. So this is the market timing chart, and this is the timing followed by that of the players. Keep that in mind and see that you recognize the various sessions, early and the late sessions of each of the session, and try to focus on the majors. You'll be able to really see good moves happening during early and the late sessions, and then try to get profit during that particular time. Always keep in mind they will handle only two pairs at a given time, and try to see though what are those pairs. And to get that, you have to see they increase the spread between the low and the high of more than 40 pips in the case of majors and more than 70 pips in the case of crosses. So in the case of crosses, they have to do the move for more than 70 pips. Only then you will come across more active moves happening in them. Let me try to answer to the questions which are asked here. Okay. Brivia has got a question. S&P 500 change direction in winter or just corrections? As I explained that they are expected to slowly correct stock market. Then any and gain the levels in the case of euro and GBP. Now, is there a fundamental reason why euro and GBP always give up and down trade opportunities? There's no fundamental change as such. If you come across earlier, at least in the last year and things like that, they've been talking about the Greece crisis, the Spanish crisis, etc. Now there is no such thing. And the only thing is they just say that Draghi is dovish in his talk and things like that. So if any of the finance minister, if he is not in the mood and he talks in a very polite way, immediately they will correct the market. If that is the case, then they need not go in for any economic protections. No, the finance ministers can simply talk like that so that their currency will automatically weaken. It is the easiest way of controlling the market. The nodal agencies like the Fed, ECB, then all the other nodal banks need not spend any money, need not spend any effort if the market is capable of making the moves based on the sentiments created by that of such agencies, so that they can continue to give the sentiments to the market, and they need not go in for any of the economic development still they can achieve. But see, that is how they make the moves in the market. But ultimately, you find that they take all those things as excuses. On Friday, the data release from US was really positive to US dollar, but they did the USD weakening move. The earlier occasions, then the data came from that of euro and GBP, the regions. They were negative, but they did not drop euro and GBP for that. So keep in mind that it is not the fundamentals which is driving the market. It is a question of the traders committing positions. If all the traders take sell positions, I can give it in writing, the players will not drop, even if there is a bombardment in some place, and they will gain all the levels and try to book profit when the short selling comes in or short covering comes in. Then MRC. Can we see 1.326070 on euro? Yeah, very likely today and tomorrow they will try to make such quick volatile moves. And during this time, you will be able to see such levels. See, gaining about 30 to 40 pips on the upside is not at all difficult for the players. No, don't think that it is very. And if you think that, okay, euro looks very heavy, it cannot gain even 20 pips. If you think like that, then you will be fooled because they are all moved by that of the players. Then he asked, what is the expectations for Aussie New Zealand cross? See, Aussie New Zealand, Aussie is showing 2 pips positive net change, whereas New Zealand dollar has come down about 55 pips. So the denominator New Zealand dollar is weaker when compared to that of the numerator. When the numerator is strong, the currency is expected to go up. So there is Aussie New Zealand dollar. Okay, it has gone about 72 pips. So this is what you need to understand. Whether the numerator is strong, denominator is strong, because both are numerator currencies. But here, Aussie acts as a numerator, and New Zealand dollar acts as a denominator in the cross. So when Aussie is numerator, when numerator Aussie goes up, this will also go up. When the denominator goes up, that means the denominator becomes strong. Then it will pull down the cross. The ratio will become reduced because when the denominator is stronger or a bigger number, then automatically the ratio will come down. So here you find that the New Zealand dollar, they are just making the drop. Aussie, they are holding it. Later on, they will drop Aussie also. At that time, you will find it will come down. In MRC. So the pullback in euro will come Monday, Tuesday. Yes, there is a likely that they will make a pullback and again drop. Till next week, we'll come across volatile moves. Always wait for quick moves, then try to take possessions. In INI, what is the projection for GBP Aussie when GBP begins to rise after next week? At the time, GBP Aussie will come down because GBP is expected to gain, Aussie is expected to weaken. So when GBP becomes stronger and Aussie becomes weaker, then you find GBP Aussie comes down. That will happen for next week, as you mentioned. Then as euro is about minus 35 pips net change, should we take a buy? No, don't look into that net change. I never said that look into the net change and try to take a buy position or a sell position. If it is near low, you can take a buy. If it is near high, you can take a sell. And if it is in the middle level, respective of the net change, there is no point in taking a position. You will be simply holding that position. And also, this is the mid session. So 5:30, they started the start of the late session. You watch the late session moves when it comes closer to low and not breach the low for more than 30 minutes during the start of the next session, then try to take a buy position. Otherwise, my advice will be wait for quick upward extended move and then try to take sell positions. Rather than doing a buy and sell trade, wait for quick upward move and take a sell position because they will not sustain the gained level. On Thursday and Friday, they quickly gained the level in the case of GBP, but they did not sustain the gained levels. In a similar way, they will try to make a quick move and start making a slow slide. So that you can, after the quick rise, you can take a sell and slow rise, slow drop they will make and then try to maximize the profit. Then how do we identify the two currencies being handled in a session? As I explained, the first two currency having the maximum spread between the high and the low. So here the spread is about 30 pips and here it is about 19 pips. So here again that 24 pips the spread. So you just find out how much is the spread. But euro, the high is wrong. It is actually 32.20 as the high. But this particular code page shows the Friday high. So you look into the platform and see where they are making the spread between the high and the low is more than 40 pips. Two pairs they will do. And then those pairs they are handling. If you commit positions there, you will be able to book profit in that. Many of the people have got the tendency when Euro has made the drop, GBP has made the drop, when Aussie is not making the drop, immediately they think that it is better to take sell position in Aussie. It is a stupid idea because the players know very well that is what the herd of traders are going to do. What they will do, they will just firm up Euro and GBP about 20 pips, then Aussie will firm up 20 pips. Immediately, people will think that those who have gone short think that, okay, market is reversed. So immediately they will do the short covering. Again, they will make a downward move. This is what's happening. So as I told you, when Euro and GBP are rising next month, they are going to drop Aussie. So when Euro and GBP are gaining, people might think that, okay, Aussie is the one which has not gained, so we'll take a buy. Then they will make for the drop in Aussie. So understand that the players act against that of the traders. That is the way they make money. You know, the strong fundamental feeling of the traders that when the numerator currencies gain, they all should gain. That's what we assume. But they will simply make it that one or two currencies gain, the other currencies drop. As I told you, that when Euro is rising, many of the traders tend to sell USD CHF, thinking that it will come down. But this time, next month onwards, you'll come across Euro and GBP gaining. At that time, CHF is also gaining. So you'll find really such contrarian moves are going to be the in play. So be careful with that. Then would GBP Aussie not rise further if GBP rise and Aussie falls? So when GBP rise, say 100 pips, Aussie falls about 100 pips, you find lesser impact because the pip value of GBP is higher, Aussie value is less. So automatically when GBP is gaining, you will come across a gaining move in GBP Aussie. But when Aussie becomes weakened, the denominator becomes weak, then GBP Aussie will also gain. Because the denominator loses, then automatically when GBP gains, then the GBP Aussie cross will also go up. If I just said wrongly, and my apology for that. And actually, it will go up when the denominator weakens. Then ADI. What is the expected USD yen high price level this week? I told you that 105.50 or slightly above. What is going to happen next week? Will it drop or what price? No, USD yen is expected to trade around 104 to 105 level, probably down stop, and they may come to 103.80. Will. Okay. Any. What could be the projection for ZAR? Okay, all the regional currencies, South African rand, the ZAR, all the regional currencies are expected to strengthen first. So the regional currencies are expected to strengthen initially from end of this week and the next week. Followed by that, you'll find Euro and GBP will also strengthen. So as I told you, that they do the sequential trend reversal in that the first one to be handled are the regional currencies. Then later on, you come across the commodity crosses, then commodity pairs, and then you find the majors, yen crosses and yen, then the majors, and finally, European crosses. That is how they do the trend reversal. And that the regional currencies are expected to strengthen first. Any other question, please? Okay, if there are no questions, then I'll try to show the slide of the forecast again for the benefit of the latecomers. Adi has got a question for info. What is ZA? It is South African rand is called ZA. You kindly go into the websites, various websites on Forex. You'll come across the explanations and also the details of those things. Then MRC swing and slide in US session can be up to 40 pips. Yeah, it will be around 30, 40 pips. Because nowadays they are not making 100 pips moves. Probably during trend reversal time, they are likely to make it, but we have to keep our fingers crossed and see how they are going to do it. Okay, this is the slide explaining the expected market moves and the levels in which the currencies are expected to make moves this week. Then the initial lows and the highs. Okay, I take this opportunity to thank FX Trade for the facilities provided and also for those who have come and attend the webinar. I'll come back on Thursday, 28th of August and try to review the forecast what I've given. And don't develop bearish field blindly and try to be an opportunity trader this week. Whenever there is a strong pullback, take sell. I'm not recommending a buy and sell trade, but strong pullback, you try to take a sell so that you will be able to book profit during this drop. Otherwise, if you are using the hedging order, you can hedge and book profit on the sell side. Then afterwards, you can book profit next week on the buy side. So thank you one and all. See you on Thursday. Wish you all very happy trading week ahead.